ZIM, a global shipping company, reported fiscal 2023 first quarter earnings results. So in this video, I'm going to review and analyze its latest earnings update. I'm also going to issue a recommendation whether or not to buy, hold, or sell ZIM stock. So you're not going to want to miss that. Let's get started. Revenue in the first quarter collapsed to 1.37 billion, down from 3.72 billion in the same quarter the prior year. Remember, during the earlier and middle stages of the pandemic, shipping rates absolutely exploded as people were spending more time at home and spending money away from home was more restricted. So we were buying more things like computers, electronics, furniture, and so on, physical goods that require to be shipped inbound, which is beneficial for companies like ZIM. And so the decrease now led to a loss per share of 50 cents. This was down dramatically from an earnings per share of $14.19 year over year. Carried volume of 769,000 TEUs was down only 10% year over year, but average freight rate per TEU was down 64% to $1,390. This was down huge. This prices skyrocketed during the early and middle stages of the pandemic, which caused a lot of big retailers like Walmart and Home Depot to contract their own ships because shipping rates were so expensive and they were at risk of missing inventory shipments. So they just decided to contract their own ships. That was a big deal, and now it's normalizing. Prices are coming down. It's good news for retailers, but it's bad news for ZIM. Cash flow from operations was down to 174 million. That was compared to 1.66 billion in the same quarter last year. Overall, I think the big picture from these latest updates is that the company's not going to experience the boom times that it experienced in the first quarter of last year, but they're also not going to permanently be in the position they're in right now. This is the bottom. This is following the boom times of last year. These are now the bottom times, and this might persist for another quarter or two or three, but eventually we will reach a healthy medium where rates are back higher and average volume is above where it is right now. Thankfully, ZIM has $4.25 billion in cash to hold it over until things improve. And still, even though things are in this depressed state they are in right now, the company still generated 174 million in cash flow from operations. So even in this depressed state, the companies can still be positive cash flow from operations. And thankfully for investors, management is cautiously expecting improving prospects for the second half of this year. But I would say that for investors to be cautious, because remember, during the pandemic, we bought a lot of long lasting goods, and these are things that don't need to be replaced for several years. Think of the kind of things you bought during the pandemic, like refrigerators, beds, sofas, laundry machines, gaming consoles, laptop computers, big screen TVs. All these things are large physical goods with thousands of dollars of spending that are typically bought from overseas that need to be shipped to the US. But these things are long lasting. If you bought one of those things in 2020 or 2021, you're probably not going to buy another one for several years. So for that reason, global shipping rates are likely to be depressed for a couple more years before they rebound significantly, probably in 2025 and 2026, because now you're going to start to see those items need to be refreshed, and a boost in consumer demand for those items will likely create a boost in shipping rates. So overall, to answer the question, is ZIM stock a buy? Even though the company has difficult prospects for the rest of this year, at the very least, the stock is not expensive. The stock is very, very cheap, trading at a price to earnings of less than 1. Now, this stock has never traded at a price to earnings that's very expensive like a tech stock, but a price to earnings of less than 1 where it's at is lower than usual for this company. So for that reason, I would cautiously recommend this stock as a buy, but be mindful that the company has difficult prospects for the rest of this year at the very least. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.